Well, let's get more on this now from Dennis Kenji Kipker. He's the Research Director at Cyberintelligence.Institute. Really good to have you back with us, Dennis. All this deal making that OpenAI is currently embarking on is fueling fears of another AI-powered tech bubble where the same few companies are investing in each other to keep their valuations afloat. Are you worried about that?
Yeah, so experts have widely raising these concerns for a long time that the current AI investment frenzy, and particularly the massive circular deals that we see, involve companies like OpenAI, Nvidia, AMD. This is really the hallmarks of such a bubble, possibly comparable to the dot-com era where valuations surged and rather than the current proven profits. And this is what we currently see here. And the circular financing model that you mentioned, where suppliers effectively fund their customer, here OpenAI, to purchase their own products, create some kind of a reflexive loop that can artificially inflate both revenue figures for the suppliers, but also the ultimate valuation of the whole AI company, thus making the entire market in some way reliant on ever increasing enthusiasm and a belief that AI will deliver huge imminent productivity gains.
It is a big gamble, isn't it? How sustainable is this circular model, given that it basically says that OpenAI's success now underpins the success of tech giants like Oracle, Nvidia, and AMD?
Yeah, so frankly speaking, the circular model is inherently vulnerable and also, in my opinion, financially opaque. As a revenue for the suppliers is heavily dependent on a single money-losing customer's ability to finance huge capital expenditures, often by being given warrants or some kind of equity from the supplier itself. And the key to its sustainability is OpenAI's own ability to rapidly convert its current technological leadership and also vast computing power into really a profitable long-term revenue streams, what I currently do not see. But failure to do so, finally, coupled with a rapid depreciation of expensive AI hardware and the emergence of cheaper competitors.
Given the potential risk, you can imagine regulators are keeping a close eye on this. Investors themselves might also be concerned. Do you see either regulators or investors stepping in at some point if things start looking too risky?
Yes, so definitely. So regulators and investors are definitely already expressing concern with competition watchdogs authorities like the US FTC, the Federal Trade Commission, and the European Commission already launching inquiries into these large partnerships to their risk market distortion by concentrating essentially regarding chipped cloud access among just a few dominant players, and thereby creating lock-in for new entrants into the market, and thus stifling also competition. And investors are also demanding greater transparency now on the nature of this circular revenue, because it's dangerous, and which some analysts also worry that this circular revenue is obscuring true market demand and also capital health, and may force a closer regulatory look potential antitrust issues and the fairness of the financial AI ecosystem.
Okay, Dennis Kenji Kipker, we'll have to leave it there. Thank you, as always, for joining us on the show.